So let us now look at the advanced practice questions on facts, inference and judgments based on finance. Fact is a statement that can be verified or proven true. Always remember this. Inference is a logical conclusion drawn from given statements or facts. Judgment is an opinion or belief reflecting personal evolution. In section you have to identify whether it's a fact, inference or judgment. The Reserve Bank of India, RBI, raised the repo rate by 50 basis points last quarter. It's a fact because it is a verifiable event. Second sentence, if the RBI continues to raise interest rates, borrowing costs for businesses will rise. It is an inference because it logically follows from the given fact, but it is not directly stated. The new tax policy on digital payments is unfair to small businesses. It is a judgment because it reflects an evaluative opinion. Next sentence, over the past decade, gold has delivered an average annual return of 8%. It is a fact because this is a data-backed statement. Since inflation is rising, the central bank will have to take measures to control it. It is an inference because it predicts future action based on current trends. Stock market investments are always risky and should be avoided by beginners. It is a judgment because it is an opinion-based statement. Next sentence, India's GDP grew by 6.5% last year despite global economic slowdown. It is a fact because this is a measurable economic statistic. Next sentence, given the recent fall in crude oil prices, fuel prices are likely to decrease soon. It is an inference because it is a probable outcome but not a certainty. Next question, the government's decision to reduce corporate tax will benefit large businesses more than small ones. It is a judgment as it reflects an evaluative opinion. The Indian stock market saw its highest trading volume in a decade last week. It's a fact because this is a verifiable statistic. Next section focuses on identifying strong versus weak inferences. Here you identify whether the inference is strong, that is whether it logically follows from the given information, or weak, that is it does not logically follow. Statement, the Indian rupee has depreciated against the US dollar by 5% this year. Inference, all emerging market currencies have depreciated against the US dollar. It's a weak statement because it only mentions the Indian rupee, not all emerging market currencies. Statement, a recent report states that the housing market in metro cities has grown by 10% this year. Inference is real estate in small towns has also grown at the same rate. It is a weak statement because the statement only mentions metro cities, not small towns. Statement, many investors are shifting their funds from equity markets to safe assets due to economic uncertainty. Inference, stock markets will experience a prolonged downturn. It is a weak statement because while some investors are shifting funds, this does not guarantee a prolonged downturn. Next statement, the government announced a stimulus package for the manufacturing sector. Inference, manufacturing output will increase significantly in the coming months. It's a weak statement because the increase in output depends on multiple factors beyond the stimulus. Next statement, several banks have reported an increase in loan defaults. Inference, the economy is heading towards a recession. It is a weak statement because while loan defaults are a concern, they do not alone determine a recession. Next set of questions are related to critical thinking based reading comprehensions. Passage 1 is about cryptocurrency in financial markets. Cryptocurrencies have gained global attention as a new asset class with Bitcoin and Ethereum leading the market. Governments remain divided on the regulation. Some have embraced digital currencies while others have imposed strict bans. Financial analysts argue that cryptocurrencies could either revolutionize banking systems or pose significant risks due to price volatility and lack of regulation. Which of the following is a fact from the passage? Cryptocurrencies are a risky investment. B. Some governments have banned cryptocurrencies. C. Cryptocurrencies will replace traditional banking. D. Investing in Bitcoin guarantee high returns. The correct answer is B because it explicitly mentioned in the passage. What can be inferred from the passage? Option A, there is no global consensus on cryptocurrency regulation. B. Cryptocurrencies will eventually be banned worldwide. C. Cryptocurrencies are safer than traditional banking. D. Government should allow cryptocurrency trading. The correct answer is option A because the passage states that government have different approaches. Next question, what is the judgment in the passage? A. Cryptocurrencies could revolutionize banking. B. Bitcoin is one of the leading cryptocurrencies. C. Governments have different regulations on digital currencies. D. Ethereum is a type of cryptocurrency. The correct answer is option A because this is an opinion about the potential of cryptocurrencies. Next passage is about inflation and interest rates. Central banks use interest rate policies to control inflation. When inflation rises above a certain level, they increase interest rates to curb excessive spending. However, higher interest rates can also slow down economic growth by making borrowing more expensive. Policymakers must strike a balance between controlling inflation and sustaining economic growth. So the question related to this is, which of the following is a fact from the passage? A. Central banks use interest rates to control inflation. B. Inflation always harms economic growth. C. Low interest rates lead to better economic conditions. D. Government should not interfere with interest rate policies. The correct answer is option A, because this is explicitly stated in the passage. Next question, what can be inferred from the passage? Interest rate policies impact both inflation and economic growth. B. Raising interest rates always leads to a recession. C. Policymakers prefer high inflation over low economic growth. D. Inflation is not a concern for central banks. The correct answer is option A, because the passage explains the dual impact of interest rate policies. What is the judgment in the passage? A. Policymakers must strike a balance between inflation control and growth. B. Central banks use interest rates to influence inflation. C. Higher interest rates slow down economic activity. D. Inflation has been rising in many economies. The correct answer is option A, because it reflects an opinion on policy strategy. Let us now look at the multiple categories. The stock market has fallen by 10% in the last month due to global economic uncertainty. It's a fact because this is a measurable event. If inflation continues to rise, central banks will be forced to increase interest rates further. It is an inference because this is a logical prediction based on inflation trends. Next sentence, investing in government bonds is always safer than investing in stocks. It is actually a judgment because this is an opinion-based generalization. Companies that fail to adapt to digital banking trends will struggle to survive in the future. This is an inference because it suggests a probable outcome but is not a certainty.